How's it going? It's Rocky. So today the Federal Reserve again increased the interest rate by 75 basis points, which is essentially 0.75% for four straight months, and now we are essentially at a rate that is, more or less the same level as January 2008 when the financial crisis occurred. So just want to go through some of the trades that I did today because it was, a pretty up and down day, as you can see. For the, past 5 days, we hit a high of 33,108 on the Dow Jones Industrial Average, and I want to just show you what it looks like trading the time base and the tick base, and just go through the three trades that I did for the day. So normally every Friday I release content on my account segment to show essentially how we did for the week, the transparent part of it, showing you the actual dollars, and also I try to hit on some of the trades that I did as an example for, either if you're a veteran, you're new, you're just exploring new ways of trading. And what I try to really hit on is just the system, right? The system that you use and basically the psychology of it, where I fail a lot on it, but I was hoping, as a below average retail trader, you could relate to the experiences I'm going through. And I'm not trying to sell a course. I have no specific chat rooms or anything of that nature. I just, I share this for free, my experiences. Hopefully you do learn and enjoy from it. And I appreciate it if, you can write something below just to show your love for the channel, or share it amongst family and friends. That's all I could ask for. So anyway, on this charts that I'm showing, it's right now November 2nd. It's Wednesday, and it's about 9:53 p.m. in the Pacific Coast. And today was a FOMC day, so quite a volatile day, and you can see that pretty much on the time-based chart here. You have ranges, 5-minute candles that goes up to 444 points. That's pretty crazy, because if you traded two minis, that's 444 times 10, that's $4,440 right there in just 5 minutes that you could have made. But I just want to point out that on a time base, especially in a FOMC day, it's really hard to see the pattern of what's going on. And that is why I'm going to focus on the tick base side here, where each candlestick is 512 ticks, and I am utilizing Heikin Ashi candles. So I am going to maximize the screen and show you how I did on 3 of the trades that I did. And if you were curious about the strategy and wanted to read the words for it, so it's up here what that strategy is. You can also look down below on the description, and I'll talk through it as I'm going through the trade. Basically, when I enter a trade, I denote that by a blue line, and when I close whatever trade I had, I denoted a purple line if I was shorting, and I denoted with an orange line if I was going long. And I draw these vertical lines as a way for me to go back later to analyze what trade I did, because in the heat of the moment, lots of things going on. What you thought you saw may not have been what actually occurred. So this is a good way for me to go back to see basically vertical line it all up. I can see the candlestick, I can see all my indicators, and that's very important because stochastic RSIs and the MACD are both lagging indicators. So I'm gonna focus on this first trade first. I'm just gonna analyze this for you. I did go short with 8 contracts. I was actually this is the micro, so I'm trading the micro more daily now, and basically the reason I'm doing that is my cash balance is a lot less than what it used to be, and I have this tendency to hold long when I shouldn't be. So what I'm doing right now is I made it a point that on the YM, which is the E-mini, which is 10 times what a micro is, I have one long contract that I'm going to keep open until December when the contract expires. That way, it's a roundabout way of me fixing a flaw that I have. And basically, on the micros, this is where I'm focusing on how I should be trading, which is essentially, keeping it small, doing it rather quick, and trying not to hold it or swing it for a few days, right? And what's great about this is if I ever am losing, I don't have this FOMO of trying to hold on, or I'm not stunned to a point where I don't do anything. Because in the back of my mind, I know that, hey, you already have one that you're holding. With this one, just cut your losses and be done with it. So anyway, with this first trade, basically uh, 2 batches of shorting 4 contracts. They're pretty much 12 seconds apart here. I shorted because the stochastic RSI was on the oversold side, and that's when I like to short. And I changed the colors to red just to remind me. And basically, I did that after a crossover here. You can see on the MACD, we pretty much, cross over, and another visual way of seeing that is on the histogram. You can see it going from green to red. And it was actually quite choppy on this one. I am going to draw a white line just so you can visually see a lot better exactly where 32,987.50 is, which is the average. So that's the line right there. So for most of that trade in the beginning, I was actually underwater, and when can finally see that it was starting to dip, place my OCO, protected myself, and exited at 32,886. And so here's a calculator. Can't do mental math anymore, and this is a nice way of visualizing the math here. Basically, we shorted at 32,987.50, and we covered at 32,886, which is 101.5 points. And basically, 1 micro is 50 cents. So I would normally multiply that by 0.50. But since we did 8 contracts, that equates to $4 for every point. So we'll multiply that by 4. And on this trade, we actually made $406. And now let's go through the second trade that I went through here. I think I'll just keep the 2 here and do it quickly. Same pattern as you can see. On the stochastic RSI, we were on the overbought side for both of them, and that's why I entered. And basically on the MACD side crossover, and again you can see histogram going from red to green, and it's the same on the other trade going from red to green. And basically on both trades, I just did 6 contracts. And when we were at a reasonable profit, I placed my OCO. And sometimes, I just flatten it just to get, if I don't see I don't like what's going on, I just flatten it, which is what happened on the second one here. I saw it was struggling to try to go back up. On this first one, this is where I just placed an OCO. And you can see, I was stopped out. So see it going red here, but definitely left a lot on the table, but that's okay. That's one thing that you just got to do. You can't hit the peaks on a lot of these. So I'm bringing the calculator back on this one. On the first one, so again, this was long. So we exited at 32,528.50, and we entered at 32,455.83. That's 72 points. And then since it's 6 contracts, we'll multiply that by 3. And on this trade, we made $218. And then on the right side here, we exited at 33,328.83. We entered at 33,280. That was 48 points. Multiplied that by 3 because it is 6 contracts. And on that one, we made $146.49. So I want to show you that, even though I was down pretty much for the day on my overall, right, on my trading, I was able to hedge a little by trading the micros. It would have been more significant if I just shorted the entire thing for the entire time, but can't take this way because I'm trying to get away from that, right? I want to be going in and out and basically go back to a system that worked for me that I'm hoping to pretty much help me get back to break even for the year. Anyway, that's the content for the week. I will try to do more of these if there is some interest based on the views or comments that I get from it. But every week I'll still release my account statement. All right, have a good one, and I'll see you on Friday.